Hello everyone, welcome to Options with Doug, streaming live daily on Bookmap Discord and the Bookmap YouTube channel at 1:30 p.m. Eastern Time. Before I get started, I need to go through the disclosures. General disclosure: all Bookmap Limited materials, information, and presentations are for educational purposes only and should not be considered specific investment advice nor recommendations. Risk disclosure: trading futures, equities, and options involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. Here's my contact information. The best way to get in touch with me is through Discord. My name on Discord is Doug P. Also in Bookmap Discord, there's an Options-Doug chat channel. That's a great place to post questions, comments, and content related to the topics of my presentation and the topics of the channel, which I'll go through in just a moment. I'm also on X, formerly known as Twitter. My name there is @DougPless. The focus of my presentation today and the focus of the Options-Doug chat channel is options order flow, the impact of options markets on stocks and futures, and the influence of market maker hedging flow on price action. I have a two-step process for trading, and the first is planning, and I use positional analysis. I look at how traders and market makers are positioned in the options market and how those positions change from day to day to develop a thesis regarding the expected trading range and volatility for the day, as well as a directional bias. And the second step of my process is execution. I look at real-time order flow in Bookmap and real-time market maker hedging flow in Spotgamma Hero to confirm my thesis and for setups for entries and exits. And when I talk about setups today, I will be focusing on an underlying asset, and setups can be taken any number of ways. For example, S&P 500 setups can be taken with ES futures, SPY shares, SPY options, SPX options, or even ES options. Questions and comments are welcome, and I will be watching both the Options-Doug chat channel and Discord, as well as the chat and YouTube for your questions and comments. Please feel free to post, and I'll do my best to answer your questions. And hello, Don. Welcome. Glad you're here. All right, here's my agenda for today. First of all, I want to cover news items, economic data, and events for today as well as the rest of the week. And then I'll go through my positional analysis. And then I'll review some setups from earlier today. And then I'll talk about the live market. And when I get to the live market, if anyone has any stocks they want me to take a look at, please let me know and I will be glad to do that. All right, let's get started. So again, this is Thursday, December 7th. Let's start with news items. And let's see, today the jobless claims came out, mostly in line. That was 8:30 a.m. Eastern Time. Not much of a market mover. And then tomorrow, the big jobs report for the month is out at 8:30 a.m. Eastern Time. It was pushed back a week from last Friday. Normally it's the first Friday of the month, and this month it will be on the second Friday of the month, tomorrow, December 8th. That's the jobs report, 8:30 a.m. Eastern Time. Could be a market mover. And then at 10 a.m., Michigan Consumer Sentiment comes out at 10 a.m. So that wraps up the week. Next week, there are some big events, economic data, CPI data, and the FOMC meeting and announcement, and then finally the big December options expiration. And I'll talk more about that on Monday. All right, let's get started with positional analysis now. I'm going to go to the S&P 500 first. This is the ES futures and Bookmap S&P 500 futures. And before I take a closer look at this chart, I want to take a look at a larger time frame. I'm going to go to SPX. This is the underlying index. First of all, I want to point out key turning points on this chart. This is October 30th. This is when the current rally began. And then on the Friday before, traders were loading up on puts, concerned about weekend risk. And then on Monday, price increased, implied volatility dropped, and that led to a huge IV collapse, put Vanna rally. Traders loaded up on puts, and market makers sold the puts. They had to sell futures to hedge their delta exposure. And as price increased, implied volatility dropped, market makers' delta notional decreased, and they could buy back their short futures. And during this time, initially market makers' position on the gamma curve was quite negative, and as price continued to rise, market makers' position on the gamma curve became more and more positive, leading to a slower moving rally, more consolidation. Then the next turning point was this November 14th CPI report. Came in much better than expected, and the rally continued. Positive gamma environment, slow moving. And then for the last 2 weeks, I'm going to zoom in now on this portion of the chart. And then for the last 2 weeks, consolidation between around 45.50 and 4,600. Maybe 45.40 and 4,600. So very narrow range, positive gamma environment, and that appeared to be possibly changing this morning. We'll talk about that in a minute, and most likely if the rally continues, gamma notional will become more positive again. All right, so this is the SPX, and now I want to point out key levels on this chart. First of all, the dashed purple lines are showing the lower and upper weekly expected move. This is based on the options market. I update this once a week, and SPX is trading inside that range. Then the dashed blue lines are showing the lower and upper daily expected move, and SPX is trading above the upper daily expected move today. That's also based on the options market, updated once a day. The solid red lines are showing spot gamma levels. I'm going to point out the key daily levels. These are proprietary spot gamma levels provided to spot gamma subscribers on a variety of platforms. This is Thinkorswim. The first level is the put wall. That's the strike with the largest net negative gamma. That is at 4,400. That can be expected to act as support. The next level up is 45.50. That's the absolute gamma strike. That's a strike with the largest absolute positive and negative gamma. That's where most of the gamma weighted open interest is concentrated. Then just above that is the volatility trigger at 45.60. That is Spotgamma's proprietary volatility flip level. Below that level, market makers' position on the gamma curve is negative. In a negative gamma environment, market makers have to trade with price to hedge their delta exposure, and that tends to enhance or increase volatility. On the other hand, above that level, like SPX is trading now, market makers' position on the gamma curve is positive. In a positive gamma environment, they have to trade against price to hedge their delta exposure, and that tends to subdue or decrease volatility. And then the next level up is the call wall at 4,600. That's a strike with the largest net positive gamma that can be expected to act as resistance like it did last Friday. All right, so those are the key daily levels. The potential floor at the 4,400 put wall, and then the potential ceiling at the 4,600 call wall, with most of the gamma weighted open interest concentrated at 45.50. All right, let's take a look at a shorter time frame, again sticking with SPX, to see the levels in play for today. This is a couple days worth of data for SPX. Noted SPX did gap up today, trading above the volatility trigger now, back up above, and also up above the upper daily expected move. All right, let's take a look at Bookmap now. So now we're back to ES futures in Bookmap, and I look at ES in terms of SPY and SPX levels. So I have my own cloud notes, so I can show those levels. And hello, Floyd's Garage, welcome, glad you're here. All right, so I can show SPX levels. There's the 45.60 volatility trigger, and here is the 45.50 absolute gamma strike, noted as support in the Spotgamma AM Founders Note. Note there is a difference in price between ES and SPX, and today it looks like it's somewhere between 4 and 5, and I'm using 5, so I'm showing the 45.50 level for SPX at ES 45.55. So here's the SPX 45.50 absolute gamma strike, again noted as support. Just above that, the SPY 4.55 absolute gamma strike. And note before the cash open, that was a pretty strong support level. And the rally today really began right around 7:30 a.m. Eastern Time. A move higher from those levels. And the S&P 500 continues to make higher lows. So support level really around the 45.50, 4.55 level, and then the resistance for today yet to be determined. Here's this 45.90 level, noted as resistance in the Spotgamma AM Founders Note, and then above that, of course, is the 4600 call wall. And we'll talk about setups in a few minutes. So those are the levels in play. And again, I have SPX levels, also SPY levels, all shown with my cloud notes here. And then here's the lower weekly expected move for ES. ES now trading above that level. Also the upper daily expected move. All right, there was only one shift in levels for the S&P 500, and that is the very minor shift lower in the volatility trigger for SPX. Otherwise, no shifts in levels for SPY. So one shift lower for the S&P 500, the SPX volatility trigger shifted slightly lower to 45.60. All right, let's take a look at NASDAQ now. These are the NQ futures and Bookmap. And before I take a closer look at this chart, I want to take a look at, first of all, QQQ, a QQQ chart, one-day chart, so we can isolate the levels in play for QQQ. I'm going to zoom in just right here. Here's the 386 volatility trigger. QQQ trading above that level, and kind of a launching point for the move higher today. Here's 390 on Monday, that was the absolute gamma strike. The absolute gamma strike shifted lower to 385, not shown on this chart, just below. So currently the absolute gamma strike is at 385, and this 390 level is a large gamma 1 level. So that level may be acting as support now. Initially, minor resistance, then support, and maybe support again. So that's QQQ, the levels in play for today. Let's take a look at NDX. So for NDX, the 16,000 large gamma 1 level is back in play. It's very close to the QQQ 390 level. Here acting as resistance or more consolidation around that level, now maybe acting as support. All right, let's go back to Bookmap, go to the NQ futures. So just like ES with SPY and SPX levels on my NQ chart, I have my own cloud notes, so I can show NDX levels and QQQ levels. So there's that 16,000 level. It's been a very important level. And then 390 just below that. And note the launching point for this morning was this cluster of levels, the QQQ 386 volatility trigger, and then the NDX 15,825 absolute gamma strike call wall. And again, we'll talk about setups in a few minutes. So those are the levels in play for today. Note NQ is trading above its upper daily expected move for today. All right, let's take a look at gamma notional now to see how market makers were positioned on the gamma curve at the beginning of the day. This is gamma notional, market makers position on the gamma curve at the beginning of the day for the S&P 500, NASDAQ, and Russell 2000. And this is I'm showing a portion of the Spotgamma AM Founders Note. This is provided to Spotgamma subscribers every morning. That's where this information comes from. So again, this is market makers position on the gamma curve at the beginning of the day. And note, first of all of these numbers became either less positive or even negative compared to yesterday. So yesterday, market makers' position on the gamma curve for all of these index products was positive. Today now has shifted to negative for SPY and for QQQ, and then less positive for SPX, and also less positive for the Russell 2000. So what that means, first of all, on a positive gamma, spot gamma assumes that traders are long puts, short calls, market makers on the opposite side of that. So they're short puts, long calls. In a positive gamma environment, they have to trade against price to hedge their delta exposure. And then in a negative gamma environment, they have to trade with price to hedge their delta exposure. So this reduction in gamma notional, I think, is kind of helping to contribute to the trend day, rally day today. So again, SPY gamma notional has shifted to negative, as well as QQQ. And most likely with this rally today, they will all shift back to positive. All right, let's take a look at the Vanna model now to get an idea of what that means, a graphical representation. This is the Vanna model for SPX. What this chart is showing is market makers delta notional on the vertical axis and the price for SPX on the horizontal axis. There are two curves on this chart. The first, the light gray curve, shows how market makers delta notional may change with changes in price only, and then the purple curve adds implied volatility to the equation. That shows how market makers delta notional may change with changes in price and implied volatility. And that change in delta with a change in implied volatility is the Vanna effect. Vanna is a second order Greek. All right, let's take a look at price now. And SPX currently trading right around 45.85. So somewhere between these two lines. So now for SPX, as price continues to increase, remember again, SPX was gamma notional was positive at the beginning of the day, and this is showing that as price continues to increase, market makers delta notional will increase, and they will have to sell futures to hedge their delta exposure. So earlier today, there was really, with SPX toward the bottom of the curve, not much of a Vanna tailwind or headwind, and now that Vanna effect is turning to more of a headwind. All right, let's take a look at SPY. Here's the Vanna model for SPY. SPY currently trading right around 458. Also toward the bottom of the curve. So a little bit of a Vanna tailwind. Remember, for SPY, gamma notional was negative today, so a little bit of a Vanna tailwind. Now it looks like that's mostly gone. Take a look at QQQ. QQQ currently trading right around 390, that large gamma 1 level. So shifting up toward this positive gamma portion of the Vanna model, indicating if price continues to increase, market makers will have to start selling NQ futures to hedge their delta exposure. All right, so that's the Vanna model. All right, let's take a look at some setups now. The first thing that I want to take a look at is what options traders have been doing today. And this is the, I normally start with the S&P 500 signal. And today I'm just going to get right to the heart of what is driving price today. What this chart is showing is the HERO signal. HERO stands for Hedging Impact Real-Time Options. So everything that we've looked at so far, other than Bookmap, has been based on static data that is updated once a day, based on open interest data that comes from OCC. Spotgamma applies their own proprietary algorithms to these levels, to this information, to come up with their own levels that I showed earlier. All right, so this is real-time data now. Hedging Impact Real-Time Options, showing options trades and market maker hedging activity for a combined signal for these stocks known as the Magnificent Seven. That's Apple, Amazon, Google, Meta, Microsoft, Nvidia, and Tesla. The purple line is the HERO signal, again showing options trades, market maker hedging activity for that combined signal, and then this white line is the price, combined price for those instruments. And it looks like it may be shown in terms of a QQQ price. All right, let's take a closer look at this chart. And really, this is the key for today. So this signal, let's break out puts and calls. And notice the hero signal up until about 10 a.m., 10:05 was kind of choppy up and down. And then right around 10:05, traders started aggressively buying calls. Sorry about that. Nothing I did. That's an issue with Hero. So traders started buying calls pretty aggressively right around 10:05, and price had already been moving higher and then really started to increase pretty rapidly. When traders buy calls, market makers sell the calls, and they have to buy stock to hedge their delta exposure. And the hero signal for the Magnificent Seven continues to rise today. So today, traders continue to buy calls, shown by the rising orange line. They're also selling puts. That's shown by the rising blue line. Both are positive, both positive delta. All right, let's take a look at the S&P 500 signal. Let me get back out. So this is a combined signal also. In this case for the S&P 500. So it's showing options trades and market maker hedging activity for a combined signal of SPX, SPY, XSP, and ES futures, all into one combined signal. This is typically what I look at when I'm trading the S&P 500. All right, let's zoom in on this. This is the cash open right here, 9:30 a.m. Eastern Time. Note initially traders were pretty aggressively taking negative delta positions, and that slowed down and stopped around 10:10. All right, let's take a closer look and see what happened. Separate out puts and calls. Zoom in on this just a little bit. So what this looks like to me is initially traders were pretty aggressively buying puts. They slowed down, and then they started buying calls. So the price shifted from a quick move down to rising as traders were buying calls, and then they took their foot off the gas with puts. All right, so today they are still buying puts. They're also buying calls. And actually the put buyers are more aggressive today than the call buyers. Note the total notional value is still negative, minus 1.11 billion. All right, let's go take a look at Bookmap now. So we know that traders were around 10:10 shifted from aggressively buying puts, took their foot off the gas, started buying calls. Also traders in the Magnificent Seven we're taking positive delta positions. This is a heat map in Thinkorswim. This is showing, you can just see all these Magnificent Seven stocks. Whoops, wrong tool. They make up a huge portion of the S&P 500, have a very strong influence on price action, and an even stronger influence on NASDAQ. All right, so let's take a look at that setup. And I need to go back to ES. Sorry about that. Let me zoom in a bit. All right, so here's where traders stopped buying calls, buying puts, started buying calls, and then they also started buying calls in the Magnificent Seven. And note the clues in Bookmap here. Large traders were buying with iceberg orders. That's shown by that rising light blue line. Let me zoom out just a little bit so we can see that. So starting right at the cash open, right around 9:30, large traders were buying with iceberg orders. That's shown by this rising light blue line. So they were buying that move down, buying weakness. Very typical. Large traders use iceberg orders to hide their size. Options traders taking positive delta positions, price increases, and then buy stop orders help to fuel the move higher. Nice pullback to right around VWAP. That's shown by this light blue line. Price continues higher as traders continue to take positive delta positions, primarily in the Magnificent Seven, that large component of the S&P 500 and NASDAQ. And the rally continues. Note today that iceberg orders, stop orders, and cumulative volume delta all positive for the day. All right, so there's the S&P 500 bullish setup. Confirmed in Bookmap here, as well as Hero, looking at options trades. All right, let's take a look at NASDAQ now. All right, let's see what options traders were doing. Let's go back to Hero. All right, now I want to take a look at, first of all, at the NASDAQ signal. Let's zoom in on this. So this is a combined signal for NDX and QQQ. Zoom in on the morning. So note the reversal higher and the hero signal for NASDAQ. Let's see what traders were doing. So this provides a little bit more clarity. Looking at the orange line, initially they were selling calls, and right around 947, 948, they started buying calls. They were also buying puts. Sorry about that. So they started buying calls, stopped buying puts, started selling puts. Both the blue line, orange line moving in the same direction, and price moves higher. But really the key for the day was this Magnificent Seven signal, where traders are buying calls and selling puts, and this sharp jump higher in the call line just after 10 a.m. So traders taking advantage of the dip in prices again in the Magnificent Seven to take long positions. They continue to buy calls and sell puts. All right, let's go back to Bookmap. Go to NQ. So in the case of NQ, large traders are selling with iceberg orders. That's shown by the falling light blue line. But aggressive traders are buying. That's shown by the rising CVD. Also note at these pullbacks the shifts in volume dots. Volume dots are showing market buy minus sell. Magenta dots indicate more sellers than buyers. Green dots indicate more buyers than sellers. So nice deep pullbacks for entries. Then now it looks like some consolidation above the 390, 16,000 level. All right, let's take a look at some stocks. So first I want to take a look at AMD. So AMD yesterday announced a new AI chip. I think it's the MI300, something like that. This appears to be a kind of a delayed reaction. I guess AMD joined the move lower yesterday, but reacting very positively today to that announcement. Also, there was an announcement that Meta and Microsoft will be using AMD's new AI chip. All right, so let's start with AMD. Let's see what options traders have been doing. Zoom in on AMD, separate out puts and calls. And this shows that traders are buying calls, and that is driving price action today. That's shown by the rising orange line. When traders buy calls, market makers sell the calls, and they have to buy stock to hedge their delta exposure. And that can be a very powerful driver of price action moving higher. Note some very timely flow alerts here. These signal significant options activity. Great way to get your attention to take a look at AMD. And so far traders continue to buy calls and price continues higher, well above the call wall at 120. Let's go take a look at Bookmap again. Here's the 120. I think that was the key gamma strike and call wall. Let me check that again. Right, 120 key gamma strike and call wall acting as support. Note all the green volume dots, a lot of aggressive buyers also in. First pullback entry to 121 VWAP, just above that, below 122. Again, a lot of green volume dots here, a lot of aggressive buyers helping to move AMD higher, as well as the call buyers. This is a pretty big move for AMD. All right, the next stock I want to take a look at is Google. So I'm going to kind of focus on stocks in the news. So the next is Google. And I'm showing price action from 4 a.m. This is when DX feed starts to provide data. So it looks like about half of this move, up from 132 to 135, happened before the cash open. This is the cash open right here. That's the opening print right at 135. So the news for Google was an announcement about their Gemini AI platform. Apparently that was yesterday also. And so the reaction coming today. Let's see what options traders are doing. So AMD continues to move higher. Let's take a look at Google. More of a mixed picture here. And let's separate out puts and calls. So call buyers really driving price today in Google. Note the flow alert. Traders aggressively buying calls right from the open. They take the foot off the gas for a while. Price consolidates. Price moves higher and traders continue to buy calls. So in this case, it looks like Google price started to move higher first, and then call buyers came in again. They're also buying puts today, but the call buyers are more aggressive. All right, let's take a look at Meta now. Very strong day in Meta. Remember, Meta was one of the stocks that announced, one of the companies that announced they will be using AMD AI chips. Separate out puts and calls. So again, traders aggressively buying calls in Meta. They're also selling puts. That's shown by the positive notion of value for the blue line and the positive notion of value they're buying calls for Meta. Sorry about that. Notice call buyers take the foot off the gas. Right around 12:20, price starts to consolidate. So again, when traders buy calls, market makers sell the calls, and they have to buy stock to hedge their delta exposure. 330 is the call wall, and 317.50 is the hedge wall. 315 is the put wall down below. Let's go back to Bookmap. Take a look at Meta. Sharp move higher from the open. Just above that 317.50 level. Here's the opening print. Sharp move higher, pull back. First good entry point right around 10. Note now that more aggressive sellers are coming in. That's shown by the magenta volume dots. Let's take a look at cumulative volume delta. So initially, cumulative volume delta was rising. Now it has leveled off and now moving lower. Price consolidating as call buyers have taken their foot off the gas as well. All right, does anyone have any stocks they want to take a look at? Let's see what Microsoft is doing there. Microsoft is also one of the stocks that announced they will be using the AMD AI chip. A little bit more choppy price action here in Microsoft, but moving higher. Let's see what options traders are doing. So right around 9:50, traders started buying calls, also selling puts. That's shown by the rising orange line for calls, blue line for puts. And that's when price started to move higher. Take their foot off the gas. Price levels off a little bit, another good pullback entry. Take their put their foot back on the gas, price moves higher. All right, so bullish day in Microsoft. So we can take a look at some of the other suspects here. Take a look at NVIDIA. Very bullish day in NVIDIA also, trading above its 460 key gamma strike. So traders are buying calls and selling puts in NVIDIA. Call buyers more aggressive, driving price higher. They start to take positive delta position. They stop selling calls, start buying calls, and price responds higher. That's just right around 10:05, 10:10. Let's go take a look at Bookmap. Go to NVIDIA. Note all the green volume dots here again. Let's just zoom in on this. Very deep pullback here down to 457. You can see all the green volume dots, aggressive buyers coming in around that level. Second pullback to VWAP. Again, aggressive buyers start to come in, shift to green volume dots as traders were buying calls, forcing market makers to buy stock to hedge their delta exposure. All right, Grizzly Bull wants to take a look at PayPal. Sure. So I don't have PayPal and Bookmap here, but we can take a look in Hero. So let's go back to Hero. All right, so far today, traders are taking positive delta positions, shown by the rising purple line, the positive notional value. Let's see what they're doing. So they're buying calls, shown by the rising orange line. They're also buying puts, shown by the falling blue line. Call buyers more aggressive, helping to drive price higher. All right, you're welcome, Grizzly Bull. All right, let's circle back, take a look at the first of all the SP 500. And Jerry, you're welcome. Glad they help. What Jerry is referring to is the index relationships that I post in Discord every day. The ES to SPY ratio, the NQ to QQQ ratio, and also the difference in price between ES and SPX and NQ and NDX. All right, so now notional value for the hero signal for the SP 500 has shifted positive. I believe that was negative a little while ago, so now notional value is again shifted to positive. They separate out puts and calls. So now the call buyers more aggressive than the put buyers. And again, notional value has shifted positive. Let's go take a look at Bookmap. Go back to the SP 500. Okay, there it goes. So it looks like the $45.90 level, that's SPX 45.90, may be acting as resistance. and the heat map. Excuse me, the heat map showing some limit sell orders just above between 45.90 and 459. And if the S&P 500 can move through that, looks like the next level of interest is this 45.99 combo 1 level that combines SPX and SPY gamma weighted open interest into one level, and then the SPX 4600 call wall just above that. So once past the 45.90 level, then those are the next levels in play for today. Buy stop orders helping to fuel that move higher. So a little bit of a stop run up to 45.90. Let's take a look at NASDAQ. So it looks like NASDAQ has cleared the 16,000 hurdle. 390 just below that. As far as gamma levels go, it looks like clear sailing above. Let's go back to Hero. Check the Magnificent Seven. And they continue to take positive delta positions in the Magnificent Seven. All right, last call. Anyone have any stocks they want me to take a look at? All right, I'm going to wrap it up in just a minute. Just to point out again, this Magnificent Seven signal is one of the most important things that you can look at to understand price action in the S&P 500 and especially NASDAQ. These stocks make up such a large component of, again, the S&P 500 and especially the NASDAQ 100. That they have just a very strong influence on price action. And when traders buy calls, market makers sell the calls, and they have to buy stock to hedge their delta exposure. Since those stocks are such a large component of those indices, they help to drive price higher. All right, David wants to look at coin. All right, let's take a look at that. Coinbase. So an initial move higher in Coinbase today. Traders are buying calls. Very typical pattern. They aggressively buying calls up until anywhere from 11 to 12 or so. They take their foot off the gas and price consolidates. So they stopped aggressively buying calls and started buying puts. And now price is trending lower. Grizzly Bull wants to look at UPST, Upstart, I believe. Let's take a look at that. Oops. So pretty small notional value today. Choppy price action. So they're selling calls and buying puts. So compare that with, let's compare that with NVIDIA. So the notional value minus 4.97. Let's take a look at NVIDIA, for example. Notional value 345 million. So this is why I like to trade these stocks, the Magnificent Seven. Very liquid, very large active options market that almost always is a key driver of price in these stocks that I like to trade that I have shown in Bookmap here. These stocks up here in Bookmap, all very liquid, very large options market that is almost always, again, a key driver of price action. All right, everyone, thank you for watching. Thank you guys for posting questions, comments, and stock suggestions in YouTube. Remember, tomorrow the jobs report comes out at 8:30 a.m. Eastern Time, Michigan Consumer Sentiment at 10, and we'll talk about it tomorrow afternoon. Thank you, everyone. Have a great afternoon, and I will see you tomorrow. Bye.